Welcome everybody to the HKIAC webinar on the rise of cryptocurrency. On behalf of the HKIAC, it's my great pleasure to be here as part of Paris Arbitration Week. As you've heard, the topic of today is the rise of cryptocurrency, and we're going to come at this topic from a number of different angles. We'll talk about the rise in cryptocurrency, where we are, how we got to be where we are, and what lies ahead. We're also going to look at the different regulatory approaches of jurisdictions around the world to cryptocurrency. And importantly, especially for this audience, we're going to talk about the impact of cryptocurrency on international arbitration. So I'm very pleased that we have three great speakers with us today, and I'm going to introduce them in some detail shortly. But before we launch into our discussion, I did want to revisit the core basis of cryptocurrency and what it is that it allows us to do that makes it so transformative and important for us. So cryptocurrency allows one person to transfer something of value to another person over the internet. And by virtue of blockchain technology, there is an immutable record of any and all transactions to do with the cryptocurrency. And this activity takes place without the involvement of an intermediary like a bank, as you would have in your traditional financial transaction. And so this is really significantly transformative. It has been for many years, because what it allows is direct peer-to-peer transfer of value without the need for a bank, without the need even for a bank account, simply access to the internet, which means that it's available to all who have access to the internet. And it, of course, is very transformative in how we can do business with each other, both between individuals, but also between companies. And it has a big impact in terms of the international financial sector, and also individual state financial sectors, and a plethora of legal issues touch upon it. Cryptocurrency is not new. Of course, Bitcoin arrived back in 2008, 2009. And since then, there have been thousands of cryptocurrencies that have been developed. In fact, this morning, I looked up how many cryptocurrencies exist, and there were 18,504. But then I checked again just before this webinar started, and there were then 18,508, which just shows you how quickly this market moves. In terms of the aggregate total of the cryptocurrency markets, that's currently $2.1 trillion US, which is just a fraction of the international traditional financial markets, but it is an important fraction, and it's growing. And what is really interesting is how fast and how precipitously it's grown in just the last year or so. From early 2021 through to today, it has grown significantly. So we're going to talk about that a little bit. But for us involved in the international arbitration space, we know that where there is increased business activity, there are increased disputes. And so it's very important for us as professionals in this field to look at this industry and look at how it impacts upon the work that we do. So let me take a moment now to introduce our speakers. It's my great pleasure. We have three speakers. I would like to introduce first Vivian Koo. Vivian is the co-founder and chairperson of Asia Crypto Alliance. That is an industry association that promotes sustainable ecosystem for virtual asset service providers in Asia. She is also a senior advisor at Stashaway, which is a digital wealth management platform. She was formerly the COO and interim CEO of BitMEX, one of the leading crypto derivatives exchanges. And prior to her time in the crypto asset space, she spent nearly 2 decades at Goldman Sachs as a managing director, overseeing compliance in Asia. She's also spent time as a regulator herself at the Hong Kong Securities and Futures Commission, the SFC. The second speaker I would like to introduce is Karen So. Karen is Managing Director and General Counsel at BC Technology Group. This is an investment company whose primary business is in the digital assets and blockchain platform space. She's also a consultant with OSL, which importantly is currently the only SFC licensed digital asset trading platform in Hong Kong. She was also formerly with BitMEX in a senior compliance role, and also at Goldman Sachs as an executive director in private wealth management in Asia. And prior to that, she was in private practice at a global British firm. Our third speaker is Simon Chapman QC. Simon is a partner at Herbert Smith Freehills here in Hong Kong. He leads the disputes practice in Greater China, and he specializes in international arbitration and arbitration-related litigation. He is ranked in all of the leading directories, and his practice covers both investment treaty and international commercial arbitration. He specializes in high-value complex claims, in particular claims involving fraud or breach of warranty, and he has a very busy practice in terms of post-M&A, joint venture, and shareholders disputes. And very importantly for us today, he has experience in crypto industry-related arbitrations. So welcome to you all. It's a great privilege and pleasure to have you with us today. Vivian, can we start with you? The rise of cryptocurrency, it's been quite a journey, and we're seeing such an important uptick now. Can you take us through some of the key steps and how we got to where we are and what you think is ahead?
Sure, very happy to do that. Very happy and honored to be with such an esteemed panel talking about crypto, which I have been doing in the recent past many months since I got into the industry in 2019. So I think, as you mentioned, Sarah, in 2008 was really when Bitcoin started coming about. And so if you think about it from then till now, I mean, we have to talk about all the developments. It probably would take an hour or more to do that. But there's certainly, something that why we are all here is, you mentioned about sort of the $1 trillion market cap that crypto assets now dominates. Even looking at Bitcoin, which is the most dominant one, it's about 800 billion, and the next one is Ethereum. And so a lot of people ask, so, how do we differentiate about sort of Bitcoin, altcoin, and others? So I'll go back, in history, and then maybe we can talk a bit about what year, sort of this different coin comes in, or how the different network comes in over the years. So right now, if we look at the stats, and this is probably skewed towards US, because a lot of research comes out of US, that about 40% of people who trade crypto is between 18 to 25. So if you think about actually 2008, that was time of the financial crisis, and probably a time when, things in the market are very unstable, and people look to other sources of, okay, well, if clients started printing money, economy is unstable, actually sort of what happened to the broader economy. So it was allegedly, somebody called Satoshi Nakamoto. Nobody really knew if he or she really existed. Is alleged that is actually a group of people who created Bitcoin, and the first transaction really happened in early 2009. And ever since, there have been things that are happening sort of every year, every other year. So 2010, there was this huge hack case that happened. And if, those of you have been following, you hear about people using 10,000 Bitcoin then to buy 2 pizzas, which would now be worth over several $1 million, if not more, depending actually which day you look at Bitcoin. So now it will be even more because Bitcoin is obviously back up. And then 2011 is really where the altcoins actually start coming about. So altcoin is everything other than Bitcoin. So Ethereum and all these other coins. But of course, actually, as I mentioned before, Bitcoin really is the dominant, next being Ethereum, probably about half of its market cap. And 2013 really was I think, signaling actually when the government and some of the regulators started looking at some of the bans and restrictions of different countries, different countries and national banks, because of the publicity of scams that are happening. These things usually happen, new technology. I think, regulators and authorities actually not catching up in time yet. I mean, a lot of it still happen, but as we move to the more professional and more traditional route now, there are more system and solution that can help safeguard it. But at that point, obviously, it was, fairly common. And then 2014, Microsoft started allowing users to purchase games through Bitcoin. So that's another sort of worth noting, not worthy thing to highlight. And then 2015, which is a sort of big turning point, was that Ethereum network start existing, some people always got confused about Bitcoin and Ethereum because those are the two sort of biggest coin, if you want to say, but they're actually used quite differently. Bitcoin is more used, as you all know, actually is viewed as more of for payment means, whereas Ethereum, a lot of things like, for example, NFTs and utility tokens, actually they're used for different purposes, but obviously very game changing because it's, I mean, if you look at the rise of Ethereum and in terms of appreciation, I think there are some that speculate that Ethereum prices may go above Bitcoin, not in absolute sort of dollar value, but in terms of use cases, given actually how Ethereum are being used. And 2015 also Coinbase was found. So Coinbase, as you all know, actually probably one of the biggest regulated exchanges, a lot of users, probably quite dominant in the US. And then fast forward 2017 is what people remember for the ICO sort of bubble. So only probably about 2% or less of all the ICO actually survived. That's why actually people have a very bad impression or thinking about, because they equate ICO to the whole world of crypto, sort of scams, not properly registered, people just trying to flip, and a lot of people lose money. And then another interesting one is not sure, but if some of you heard about CryptoKitties, so you look at it up on the web, it's a first online game, and I think the token, the more expensive one, is worth easily like more than 6 digits, like US dollars. And I also, when I got in industry, I asked my colleagues, is this a scam, you think, or do you think this is like really worth something? And most of them say, yeah, no, it's a scam, but actually it is actually, I don't know how sustainable it is, but it got traded to a really high price. And then 2018, fast forward, Ripple system began to be used in some international transfer. And 2019 was New Zealand when they became the first country to officially allow business to repay salaries in cryptocurrencies. And then also that was a year, if you guys remember, actually it was Libra, I think, with Facebook, and they formed a her group. And also that was a year when JP Morgan announced that they would be looking to launch their own coin. So I think that's a little bit of the history. And 2020 and 21, obviously, when we're in COVID era, and that actually accelerated the adoption even more, because if you look at it a while back, it was still a lot of retail, but it would be retail as in people who were more in trading crypto. 2020, because most people are sitting at home, a lot of them. So the use of crypto really increased during that year. And 2021 was an all-time high for crypto, for BTC. So it went to nearly 70,000 from the low of when I joined the industry, 2019, it was 3,000-ish. So huge fluctuation. And I thought a lot of people speculating and trading just don't understand the volatility it can be in. And the other angle also, it's so last couple of months you see sort of quite a big correction on Bitcoin. I think a lot of people are surprised. You see institutional deleveraging because this is Fed is rising rates, and there's a lot of sort of trends that I think people who are younger, who've been in crypto, have never seen. So they got quite scared when the whole market started coming down. So I think that kind of in a nutshell, really sort of is a very quick recap of what happened from 2008 till now. And then maybe just very quickly on the going forward. So you see a lot of news about how the banks are coming in now. So, with JP Morgan, Morgan Stanley offering Bitcoin related sort of funds, I think back a year ago. Goldman, now I think they have cryptocurrency on their website, I heard. I saw it. Whereas I think going back to maybe 12 months ago, I think they're saying that this is not really a true asset class. And then Jamie Dimon, again, not that everybody has to go to metaverse, now has a lounge at the metaverse with a tiger they're moving to, actually, I saw. So a lot of different institutions actually, again, basically, I don't know if accepting is the right word, but basically trying to get into space to see what business they can do. So I think all these leads to us believing this, this has to be the trend that institutional are really coming into the space. I'll just pause there.
Thank you, Vivian. That was an excellent, walk through the chronology of where we've been over the last 15 years. And we see that all of those points that you pointed out were disparate, were different in their nature. So it is such there's so much going on in the industry. And you mentioned that, Bitcoin has been recognized as an asset, and Karen, I want to come to you because we understand, that Bitcoin has only recently been recognized as an asset, broadly speaking. But in terms of the continued evolution of cryptocurrency and uptake and adoption of cryptocurrency, where do you see where there may be obstacles to that, and in particular from a legal perspective?
Mm-hmm. Sure. Thanks, Sarah. I do believe that crypto is here to stay and will continue, as you say, to grow significantly. And there are 18,000 odd cryptocurrencies out there already, and the number has tripled since the end of 2019. And as Vivian mentioned, financial institutions are all trying to get in. We have as Vivian mentioned, Morgan Stanley, JP Morgan, to name a few more, State Street, Citadel, Fidelity, they've all gone from subtly acknowledging the existence of this asset class to in some shape or form laying the groundwork to be a participant in this space. And most recently, Goldman Sachs not only put crypto on their website, but it has entered into the first OTC crypto option trade. But comes with this growth, there are a few obstacles in the industry. And as I see it, I'll name four. Firstly is regulation. A major concern is the worry that government and regulators would interfere. And in some nations like China, they've already banned cryptocurrency. Elsewhere in the world, historically, the regulatory oversight of digital assets and cryptocurrency has been arbitrary, non-existent, and inconsistent at best. However, I do think that this obstacle is slowly disappearing. Now you'll see that an increasing number of regulators and lawmakers in different countries, they've decided pretty much on whether to regulate digital assets. And in a lot of cases, they are preparing to do that. So in terms of next steps, they are really deciding on when to regulate and how to regulate. The clearer direction and evolving regulatory landscape may soon finally gain structure and oversight that consumers, investors, businesses, and the market have long been waiting for, and with respect to consistent regulation and adequate protection of digital assets. What remains to be seen is how the regulations of different countries would operate alongside each other, as consistency, of course, is also very important for an industry where providers are actually operating globally and, seemingly seamlessly as well.
Yeah.
The second obstacle I would see is actually the reputation of the industry. Cryptocurrencies are seemingly make it easier for fraudsters to obscure the source of criminal proceeds, and therefore has become the preferred currency for cyber criminals, from purchasing illicit goods using crypto as a method of payment to ransomware attacks where payments by cryptocurrency are demanded. This trend is more prevalent because cryptocurrency offers a combination of anonymity, ease of use, and the ability to circumvent international borders and regulations, in essence, to launder the ill-gotten proceeds. However, there are implementation of additional regulations across the globe now, and these concerns should be addressed over time. Some of the measures as they relate to combating money laundering are already in place in a number of countries, which require operators, whether local or overseas, to register, and amongst other things, to adopt AML programs, conduct risk assessments, implement comprehensive KYC processes, screening and monitoring. Key obstacle number three, Vivian already mentioned a bit, is the volatility and also the limited usage of cryptocurrency. The price volatility of cryptocurrency scares away most people who aren't interested in the get-rich-quick concept. Ultimately, investments in digital assets are speculative, so investors should really go into it with their eyes open. They are by no means stable in value, and price fluctuation is not necessarily correlated to anything, although a good number of fluctuations could be linked back to geopolitical situations or market conditions. And there are certain trends that can be observed. Further, the market for cryptocurrency, with the exception of highly traded ones like Bitcoin and Ethereum, may be very illiquid, and transfers and acceptances actually costs investors and users. Also, cryptocurrency is not widely accepted. Mostly it is just an investment rather than a mode of payment. However, it is worth noting that some cryptocurrency credit cards are starting to pop up. They instantly convert your Bitcoin into money and can be used for payments, where standard debit cards can be used. The fees are high, but it's a starting point to get to use crypto for payments. And one last key obstacle, I would say, is security risk. A large part of the reason why people worry about investing in digital assets is concerns over safekeeping and security. digital asset wallets are seen to be easily broken into, hacked, or even set up as con schemes. Once your wallet is hacked, you don't actually have a way of getting your money back. And even established digital asset service providers are vulnerable to hacking attacks. In January this year, Crypto.com had a hacking incident where a hacker made off with $30 million worth of cryptocurrency stolen from 400 odd users' digital wallets. And in these situations, customers may have a recourse against the provider, but that's subject often to the solvency of the provider. Insurance taken out on wallets and virtual asset holdings are still very new and not widely offered by insurance companies. And unlike traditional financial markets, where deposits and some securities are afforded some protection by the government or regulatory body, like the Bank Deposit Protection Scheme in Hong Kong or the FDIC insurance in the US, there is no safety net offered for digital assets. Institutions interested to get into crypto are particularly concerned about security risk, but we are seeing an increasing number of secured institutional custody offering proposals in the market in an attempt to protect digital assets adequately.
Thanks a lot, Karen. That's really interesting. And Simon, we're starting to see there, through what Karen's shared, some of the areas of the downsides of crypto and starting to get close to what we might be seeing in terms of disputes. Can you tell us what you see in terms of disputes coming through, and also what you think, generally speaking, cryptocurrency means for international arbitration?
Sure. I mean, I think the obvious first observation is that we're seeing a rise in disputes involving cryptocurrency in all its shapes and forms. And some of those disputes are investment related arbitrations. So disputes arising from startup investment, for example, or seed capital. There's a huge amount of private equity and venture capital investment in the crypto space at the moment. And all of that triggers shareholder disputes of different shapes and forms. So we're seeing definitely a rise in the number of cases in that space. And then you have disputes that relate to the services that are provided by the platforms themselves. And there are a number of quite high profile class actions that have been commenced or threatened to be commenced against various crypto platforms that have received a lot of coverage already in the public domain. Many of the platforms choose to submit those disputes to arbitration. And so I think that's a huge opportunity for arbitral institutions. We did a quick sort of straw poll before this session. At least 3 of the major crypto platforms have got HKIC clauses in their contracts. And then there's a variety of other institutions, but the predominant theme is a preference, I think, for arbitration. We can perhaps come back to why that might be later on, but definitely lots of scope, I think, for disputes in this area. I think that perhaps brings with it a greater demand also for arbitration professionals who are equipped with some knowledge about the industry, because whilst the legal issues in many of the crypto disputes, certainly that I've seen, are not necessarily novel, lots of them are, as I say, shareholder disputes or straightforward contractual disputes. Lawyers and arbitrators often do need to be familiar with the context in which those disputes arise. And that in turn requires some familiarity, at least, with the industry, and in particular, and we've talked about this before, some of the jargon that's used in this space, just understanding what people are talking about at different parts of the industry. But there are also a number of novel legal issues that can and do arise in some of these cases. I've seen a number of cases that relate to the mechanism behind crypto derivatives, for example, perpetual swaps and how that works, the governing law of on-chain activities in the absence of express agreement. How do you determine the governing law that applies? And whether a crypto platform or a protocol is centralized or decentralized. And that then leads to related questions about whether liability can be attributed to certain individuals or entities. And some of the people that have joined this session may have seen a recent example from the Wall Street Journal about a case that's been brought. I think it's a class action claim that's been brought in the New York courts in relation to the Pool Together platform. Pool Together, I understand, is what they call a no-loss prize game on blockchain. So users deposit crypto into this platform and they then have a chance to win awards. It's a way really of incentivizing people to use that platform to deposit their crypto. And a user has commenced a legal claim against the platform, arguing that it is, in essence, it's a lottery. It's a lottery that is prohibited under New York law. And the case is still ongoing, but the defense that the company has run is that it's merely a website operator and it doesn't own or control the platform. The platform is governed by its code on blockchain, and the code can only be changed by a majority of vote of the token holders. So there are all sorts of quite novel legal issues that will come out of these claims. But I think the key point is that there is definitely a rise in crypto-related cases, and that's something I think that it's a trend that is very likely to continue.
Right, I agreed, Simon. And if I can just share a little bit of what we're seeing at HKIAC, we have seen a strong uptick particularly in the last 2 years of cryptocurrency-related arbitrations, spanning a wide variety of subject matters to do with the virtual currency exchange and the different agreements that exchange will enter into. A lot of financing transactions where the entire transaction is in cryptocurrency and the collateral is also cryptocurrency. And there you see special formula in terms of deciding whether or not a liquidity margin is met. The supply of Bitcoin mining equipment to Bitcoin miners and so forth. And one thing that we see in our cases is that we see a number of the cases they have relatively small amounts in dispute, and those tend to settle. And then the other cases are very high in dispute. And at the moment, we're not seeing too much in the middle. So that's interesting, but you're absolutely right, Simon, that what we're seeing also is that parties want people with tech experience or at least some experience in crypto-related disputes, because while some of these cases are perhaps a typical contractual case or dispute at the base, others are not. Now, I want to move to the different regulatory approaches that we're seeing across different jurisdictions, because of course this is going to have an impact on arbitration, and I'll come back to that soon. But I wanted to go to you, Vivian, and ask you, can you give us some specific examples of different jurisdictions and how they're approaching the cryptocurrency markets, and what kinds of distinctions they're making in their approaches to the cryptocurrency market?
Sure. As you mentioned, actually, I think different countries or jurisdictions try to bucket crypto in different buckets, because you need to bucket them somewhere in order to be able to regulate it. I guess that's kind of the baseline. I think most countries actually are now coming out with licensing regimes, because I think that's probably an easy line to draw, as in, okay, well, if you're licensed, then you can do X. If you're not licensed, you can do Y. But I see there's a big difference, and I'll probably talk maybe a bit more about the markets where actually, how should I say, actually retail, retail players are sort of more dominant. For example, the Philippines, and so Philippines actually, one of the bigger exchanges there is called PDEX, and it said in terms of crypto users in volume increase, I think something like 800% between 2020 and 2021. Whether that's because of COVID or not, question mark on that. But there's also been a trend, and this is sidetracked a little bit from sort of the normal trading crypto. It's gaming is a big thing in Philippines. So there is this very famous game called Axie Infinity. There's actually a documentary done about it, about actually how the poor were able to play games to earn points, which then got translated into Philippine sort of pesos, and they sort of kept a living actually during that period. So which has been quite fascinating. And so gaming seems to be how the Philippines adoption has been expanded so quickly. And if we move away from, sort of further to, for example, Latin America, I think everybody knows, El Salvador, the first one actually who's taken Bitcoin as legal tender, and Argentina is actually a really big player in crypto adoption. And if you look at like Chainalysis is, some of you might know, actually they are very sort of well-known vendor. They do all kind of tracking, whether it's on exchange, on chain kind of transactions. They do, gives very good statistics. So it said actually there was a sort of whopping 880%, adoption increase between June and July 2020 and July 2021. And also actually in Argentina and Latin America, in terms of how Bitcoin is being used, it is viewed as something to manage inflation. And go back to what Karen was talking about earlier, they issue credit cards. They've got proper central bank approval if they want to touch payments, but then they go through sort of the regulatory path and NEST path to get those kind of set up license. So that, again, the adoption is sort of much more than places probably like Hong Kong and Singapore, which obviously more developed and more institutional players. And also, Mexico is another country, and stablecoin is sort of the flavor of these 2 years about how now I think different countries are saying, oh, so if people are using crypto, why don't we just have some sort of more stable coined or more stabilized kind of digital currency that people can use? Then you don't have to have people dealing with this risk of this huge fluctuation. Because stablecoin itself, it can be backed by different things. Obviously some of them are pegged versus US dollars, and some of the more major currencies, they're like algo back, stablecoin, and this stablecoin that actually allegedly is not backed by anything, but is still called stablecoin. So people really need to understand the difference between how they're structured to be able to really use them effectively. And I know later on, actually, Karen would touch more on what's happening in sort of the bigger countries in Hong Kong, Singapore, and otherwise. So I'll probably leave it to her to talk about that.
Oh, thanks, Vivian. And if we do bring it down to Hong Kong, and Karen, I mean, we know that the Hong Kong regulators are looking at stablecoin. That's quite a focus of them. And Karen, can you take us through, talk to us, you're at OSL, that is the only licensed digital asset service provider in Hong Kong. Can you talk us through that special status, what that's meant for your company, and also how that journey has been in the regulatory space?
Sure, I would happy to. So OSL, which is the licensed trading platform, my company, they went down the licensing route. So as Vivian mentioned, a lot of regulators are coming up with licensing regimes of different sorts. So in Hong Kong, what they've actually done is they've actually moved down the route of regulating virtual assets to the extent that they actually constitute securities. And the path to licensing is started in November 2018, when the SSE came out in FinTech Week, announcing a regulatory sandbox, establishing a direct and confidential channel with industry participants to scope out the policies and the details of potential licensing framework. A year later, the SSE came out and opened themselves for license applications under an opt-in regime, whereby virtual asset trading platforms that operate and offer securities on the platform may apply to be licensed by the SFC. Now, one thing to point out is virtual assets are not necessarily securities. It depends on the features. And in fact, under the Hong Kong regulations, most of the virtual assets that we come across, like Bitcoin and Ethereum, they're not securities. So the SSE has gone down the path of, at least back in 2019, say, okay, we'll start regulating. If you have a security that you're offering on the platform, you come in an opt-in regime and we regulate you. So on the back of that, a day after the speech, OSL submitted its application. And a year on, again, FinTech Week, the Financial Services and Treasury Bureau and the SSE, in fact, announced further development in the space and announced the move to amend the anti-money laundering ordinance to require compulsory licensing for all virtual asset service providers. Now, this is not just providers who provide security services, but everything. And that's for all providers operating in Hong Kong, whether or not whether or not they're based in Hong Kong, in order for them to offer virtual asset trading services. These changes are actually being tabled at the Legislative Council this year as we speak, and we expect that full-blown licensing regime to come into play later on in 2022. So going back to 2020, a year after we submitted the application, OSL received approval from the SFC, and we started business 3 months later, as their regulated operations with target clients being professional investors that are institutions. And as at today, OSL offers trading of 20 digital assets, either on exchange or on an OTC basis. Our competitors in the region, however, remain unregulated under the current Hong Kong licensing regime until probably the end of the year. And for as long as they don't offer securities on their platform. So the license OSL has not put us necessarily into an advantageous position. That said, our current target client base is somewhat different to these unregulated providers who typically cater for more retail. OSL is facing some challenge under the current licensing framework, as a framework is based on existing regulatory structure, and some of the structure is not strictly applicable in the digital asset space because they're more dealing towards traditional securities. In particular, we have noted some areas of uncertainty and inefficiencies, which actually would benefit from some statutory amendment or further lawmaking, especially as it relates to existing security and futures rules. For instance, the capital requirements under the financial reporting rules impose artificially high capital costs for virtual asset trading platforms, which are actually passed on to investors today. And another example would be the legal liability for market misconduct perpetrators, operators, and other intermediaries. They are unclear as they relate to digital assets. And in terms of product offering, OSL is subject to specific virtual asset trading platform terms and conditions imposed by the SFC. And under those conditions, OSL can only offer virtual assets and security tokens. Crypto derivatives are currently not within the permitted scope of product offerings. And transactions on the platform need to be on a fully pre-funded basis. So no margin trading, the likes of how it operates in the traditional space and securities. Our offering is a lot more limited. And so as the industry evolves and moves towards a more broader offering, similar to product offerings in the traditional space, and in order to align Hong Kong licensed platforms and with other regulated platforms on comparable jurisdictions like the US, I do believe that there should be some relaxation on the terms and conditions that would be beneficial to ensure that licensed platforms continue to expand in this space. So that's the OSL experience.
Thanks a lot, Karen. Simon, can I come to you? Because obviously the different regulatory approaches of different jurisdictions is going to impact arbitration. It comes in at public policy level and so forth, and people really need to think about how that's going to impact their dispute. Can you talk us through how you see that impacting, or how you've seen it impact already in arbitrations?
Thanks, Sarah. Yeah, I think public policy is the obvious one, and we've started to see that already. Lots of people will know that an arbitral award was set aside by the mainland courts very recently on public policy grounds, an award that dealt with a crypto dispute. The background to that was that the award compensated the claimant in fiat currency, which for present purposes is basically anything that's not crypto. In that case, it was the US dollar equivalent of a crypto amount, which was then converted into renminbi for the purposes of enforcement. And the court decided not to allow the enforcement to proceed and cited various statements by regulators. And Karen touched on this earlier, the sort of blanket ban that's now been imposed in mainland China on cryptocurrency. And so the court cited, for example, regulations issued by the People's Bank of China, which indicated a strict ban on exchange businesses between fiat currencies and cryptos, and therefore said that the award couldn't be enforced on public policy grounds in mainland China. And that does, I think, send quite a clear warning that enforcing crypto-related arbitral awards might be challenging in jurisdictions like mainland China, where there has been a crackdown on crypto-related businesses. And claimants, therefore, in those types of proceedings, if you're looking to enforce in a jurisdiction that's perhaps not particularly friendly towards crypto platforms, will need to think carefully about how you fashion your request for relief to avoid the type of situation that happened in mainland China. I should say, because this is an HKIC event, that doesn't arise in Hong Kong. Hong Kong obviously has a very different legal regime to mainland China. Both Karen and Vivian have touched on the slightly different regulatory framework in Hong Kong. And in fact, I know this is Paris Arbitration Week, but at Hong Kong Arbitration Week last year, the Secretary of Justice made a point of saying that the arbitrability of crypto-related disputes was less of an issue in Hong Kong because Articles 112 and 115 of the Basic Law protect the free flow of capital and free movement of goods and intangible assets. And so I don't foresee similar issues to those that have arisen in China being applicable in Hong Kong. And as you say, Sarah, the HKIC has already handled a large number of crypto cases, but it is just something to look out for in different jurisdictions, such as mainland China, that take a slightly less friendly approach towards the crypto industry.
Thank you very much, Simon. And I think that answers one of the questions that's come up in our Q&A with respect to, given that cryptocurrency is about decentralization, how do you have a judgment or an order, an arbitration award enforced against a crypto asset owner or disputes involving crypto? And that, I think, really depends on where you're looking to enforce and whether or not you want that enforcement to be in fiat or in cryptocurrency. And so you really need to be thinking about how you articulate your requests for relief, and with that in mind. You know, Karen and Vivian, you both spent years in the traditional financial sector before you moved into the digital asset space. And I just wanted to get your sense of, or just get a quick comment from you of how you think regulation of cryptocurrency compares with how you've seen it evolve in the traditional financial institutional space. Maybe we could start with you, Karen, and then we could come to you, Vivian, just for a brief comment on that.
Sure. I'm afraid there's not much comparison at the moment, as regulations across the globe are largely in the developing stage, so can't really compare with the traditional finance space. And even in countries where regulations have been adopted, the approach has been quite varied. As Vivian mentioned, you know, they're all thinking about some sort of licensing regime, but there are places like Singapore, Japan, and Malaysia who've taken a somewhat different route of purpose-made statutory amendments, new laws, licensing regime covering the crypto industry, so separating it from the securities traditional land. And there are the likes of Australia, UK, parts of the European Union, and the US at the federal level as it stands, which up till now have largely grouped crypto regulation under just AML regulations and imposed bare bones AML obligations, leaving more comprehensive investor protection, market protection, financial stability off the table, unless operators happen to have triggered existing securities regulations already. Having said that, there are definitely plans for a number of countries to adopt a more comprehensive regulatory framework for crypto. And as for Hong Kong, as I mentioned just now, current securities regulations regulate entities that conduct activities in the digital asset space where the digital assets are classified as securities and futures contracts under the regulatory definition. So, and I also mentioned previously that Hong Kong's also moving towards a more comprehensive licensing registration model, so adopting the AML approach also to the other virtual asset operators who don't fall within sort of dealing with securities.
Thanks, Karen. Vivian, do you have any views with respect to how it compares with traditional financial regulation based on your years in compliance and your time at the SFC?
Yeah, I think Karen sort of cover a big part of it, but I think in essence, I think the regulators initially are trying to replicate actually what's covered for what we call our financial institution and try to replicate that. But I think they very quickly acknowledge also actually a big risk in the industry is AML related. That's why, all the FATF travel rule, comes in, because I think they're trying to address that aspect of the risk. Another aspect really, it's on things like advertisement. I think there's countries that strictly have banned, and again, that probably have to do with it became so retail friendly now that I think you've got, celebrity KOL and, putting out ads. It's a bit like, the Lehman mini bond days, that you're selling mini bonds using supermarket vouchers. So I think they're just kind of compartmentalizing the risks that they need to look at, and they try to prioritize them. But clearly, I mean, they're all talking to each other. They're kind of taking note of different countries, what different countries are doing. And see if, it makes sense to replicate the same. Even for lastly, for example, on the NFT area, Singapore came out and said, not going to regulate it, quote unquote, unless it's a payment token, because that's kind of how they look at the world. Is it payment related? They have a licensing regime. Whereas Hong Kong, I think, haven't definitively come out to say what they're doing. I think Hong Kong, more interestingly, is what they're going to do with retail. So.
Yeah, and just staying with you, Vivian, I mean, you founded and you run the Asia Crypto Alliance, and you're concerned with safeguarding the reputation of the crypto industry and making sure it's professionalized and so forth. Can you tell us a bit about what you're doing with the alliance and what areas you're trying to target, what practically you think needs to happen?
Sure. I won't spend too much on talking about alliance, but I think the work that we are doing, I feel that we should have an association that does what the body does, because there are a lot of great associations. SIFMA is the, I think a lot of them actually cover crypto asset as a sub-working group, but there's nothing that really focus on, basically how to develop the industry when they offer virtual assets. So I think our members, a lot of them are bigger sort of that we call it crypto exchanges in IOSCO jurisdiction. But if you think about it, actually, I talked about it earlier, I think the regulators are trying to get like a sense, because there's just so much scams out there. Even, I mean, for example, the Hong Kong ATM Bitcoin machine, they're like over 100, like apparently set up that operate them. You've got, shops in one shot, you can take cash to exchange for crypto. So it's kind of happening anywhere. You hear about people being beaten up, when they try to do these transactions. So it's very hard for the regulators to get a sense of who they're trying to, basically what their priorities are. And also, I would say, and actually, we're still at the infancy stage in terms of development. That's why it's a bit hard to set what you call industry standard, because I think that some association, I mean, we're trying to do the same to create standard, like, can we roll out code of conducts? Are there a standard for implementing things like travel rule? But I think even between regulators, they probably are working on harmonizing what they do. And, for example, area like stablecoin, the HKMA, when we talked to them, I think last couple of months, they were talking about, they will roll out what they think is right, but they're also looking at, can that be harmonized, that can be coins and digital payments that can be used cross-border. That's for one step further ahead. And really the other thing is really accreditation. I think, can we help, the industry association, can we just help to create some standard where if you have individuals who get qualified, then they can start engaging in these products other than the licensing regime that exists. So that's just a nutshell. And we try to do that so that they're more what we call responsible entities that can build out, I think, the vast business in Asia.
Yeah, thanks, Vivian. Simon, I want to come to you because you mentioned earlier, you described, some of the disputes that are coming through, and some of these are disputes that the arbitration infrastructure as we know it is absolutely adequate to handle, but there are other cases that maybe challenge some of the fundamental concepts that we enjoy in arbitration. So can you talk us through whether you think that the international arbitration framework is adequate for cryptocurrency disputes?
I mean, I think in some ways it's a very natural combination, crypto and arbitration, because you could argue that with the principle of party autonomy that underpins the arbitral process, that echoes in some ways the decentralization spirit, really, that really does echo across the crypto industry. I think the entire process, the entire arbitral process, can obviously be tailored to the needs of the particular dispute. And as we've discussed, crypto disputes take all sorts of different shapes and forms. And you can really tailor the process through arbitration to meet the needs of the particular case. There is obviously minimal intervention from the national courts. And again, that echoes a lot of what the crypto industry is seeking to achieve, getting away from some of the more conventional restrictions that apply. And in many ways, you could see arbitration as a bit like a peer-to-peer dispute resolution system, analogous to a peer-to-peer electronic cash system. So there are lots of similarities, I think, between the two. I think some of the usual advantages of the arbitral process, enforcement, speed, neutrality, confidentiality, the ability to appoint arbitrators with specific industry expertise, all of those advantages that make it attractive in other sectors apply equally, I think, in the crypto space. And that must be why we're seeing, as we discussed before, that lots of the crypto platforms have decided to adopt arbitration as their dispute resolution mechanism of choice. I do think, as we said earlier, there is definitely a greater need for industry expertise amongst arbitrators and also amongst counsel. And I know that there are a number of arbitrators out there who are deliberately focusing on this sector, really trying to upskill themselves in the crypto space, just so that they're better placed to adjudicate crypto blockchain disputes, in just the same way as we often ask, who's got particular experience in finance cases or in energy cases. There are lots of arbitrators, I think, going forward who will really focus on this as an area for further investment. I think there is also perhaps room to expand the use of online platforms to resolve disputes. Lots of the institutions, I know the HKOC is very keen on this, have been pushing that as an area of focus, and expedited proceedings as well for some of the less complex disputes that arise in this space. We're seeing this really across the board. I mean, eBram is another example in Hong Kong, these platforms that really do specialize in purely online systems to resolve disputes, usually of a lower value, not in the more complex space. And I know that there was a recent decision in Mexico where a Mexican court enforced an arbitral award that had relied entirely on a blockchain protocol. It was a landlord-tenant dispute where the arbitration agreement required the arbitrator to draft a procedural order addressed to the blockchain arbitration platform and then incorporated the decision made by that platform into an arbitral award. And that was enforced by the Mexican courts in just the same way as a more conventional arbitral award. But there are, I think, limitations to some of those platforms. As I said, I think lots of them are better suited to smaller, less complicated, perhaps lower value cases. I think adjudicators on some blockchain platforms are paid if they're in the majority, and they're financially penalized if they're in a minority. And I think lots of people would take issue with how that might influence the outcome of a particular dispute. But the short answer, I guess, is there's a huge opportunity here for arbitral institutions to take the lead in showing how arbitration can be tailored towards the circumstances of particular cases, and huge opportunity also for arbitrators and counsel to really demonstrate their expertise in this space.
Thank you very much, Simon. We have a few minutes remaining. I wanted to ask Karen, because at the top of this webinar, you talked about the 4 areas of obstacles, and I wanted to see whether or not you thought regulators were, in their efforts, were addressing those areas. But I'll come back to you because I wanted to, well, actually, Karen, if I can ask you for that now, and then I might come back to a few of our questions if we have time on our Q&A, some of which have already been answered. But Karen, do you think that the regulators have effectively touched upon those areas that you identified?
I think they're slowly catching up on it, and there are some quick fixes as opposed, and in addition, some sort of longer term. So Vivian mentioned, there are regulators out there imposing bans or restrictions of advertisements, the likes of Singapore and the UK, sort of subjecting advertisements to a stricter regime, restricting them to retail in attempt to actually protect, to impose investor protection before they have more substantive laws. And, those are, quick fixes, but, needless to say, sort of countries are actually coming to terms with the fact that more investor protection is required. For instance, in Biden's executive order a couple of weeks ago, he came out basically saying there has to be measures to protect consumers and investors. And likewise, Australia came out last week with a consultation paper proposing minimum standards of conduct by virtual asset service providers and safeguards for consumers. So they're identifying the obstacles and issues. They're coming to sort of as quickly as possible to the more robust and comprehensive laws. But in the meantime, I do see them coming out to actually try and do something in the meantime.
Thank you very much. One of the questions that has come up is whether or not there are any known cryptocurrency investor state arbitrations. To my knowledge, there are not, in the sense of claims against the state for cryptocurrency, with respect to undertakings of the state with respect to perhaps regulation. I do know that there is recent reports with respect to funding of an ICSID claim by cryptocurrency exchanges. And I know that actually, interestingly, we have seen at HKIAC crypto asset funders funding HKIAC arbitrations. The arbitration itself is not in the crypto space, but I think that is also another very interesting way in which we're seeing cryptocurrency come into our field. And of course, at HKIAC, we require the disclosure of the identity of third-party funders, not the terms of the agreement, but the identity to flush out any conflicts. Simon, do you have any input in that respect of investor state arbitrations? And
no, nothing beyond what you've said, Sarah. I'm not aware of any active cases. I'm sure there will come a time when there are some, but at this stage, I'm not aware of any active cases in the investor treaty space.
Yeah, I think perhaps one final question that I might put to Vivian and Karen, if they have anything to say on this, but is there a likely outcome between the crypto libertarians, including BitMEX, and state crypto promotion? What are the nuances for new investors?
I think that would be a tricky one for us to answer, been at the company before. That might be I think that might be a difficult question for us to answer.
I guess we will find a way. I mean, there is so much movement in terms of crypto libertarians and just the nature of the cryptocurrency industry. It's ever moving. It's very dynamic. I mean, new products are coming out all of the time, and that will not stop. That will not slow down. There are so many different functionalities that are coming forward to the market, and then the states will follow with how they wish to regulate, and maybe we'll see some loosening of total bans, especially as we see the traditional financial institutions start to move themselves into the cryptocurrency area.
Yeah, no, but I think, I think the regulator will just have to strike a balance, as in allowing for innovation to continue happening, and then putting the right framework in place at the same time, which I think they are completely aware, because I think from all the discussions we've had with regulators, that usually the opening statement would be, well, we're not trying to kill the industry. We're trying to develop something that would work, but again, obviously question mark on how quick, because innovation is happening so quickly, as you said, like your product's been created, leverage type of products. Does your license regime capture it? It's going to be very difficult because it's like chasing sort of daylights. But they're definitely, I think, trying to be receptive and engage the market in terms of trying to move. Karen, I don't know if you've had.
Yeah, I absolutely agree. And I think that's the key to a balanced growth in the digital finance industry, to have very clear guidance, more defined, comprehensive set of rules, whether, when it applies and when it doesn't. And also, noting that the industry is global, to have sort of consistency across the globe to enable operators to actually operate globally and seamlessly. Obviously, to the extent that they apply for the necessary licenses and registrations, or can be afforded exemptions, but we need a sort of global regulation as opposed to each regulator coming in with their own rules. So, I do urge that they talk to each other and, come up with some consistency and clarity.
Yeah, absolutely. Thank you, Karen. Well, I think, we're at time now, so thank you so much. And my apologies to end on a question that you couldn't quite answer. But your comments
we try our best.
One of the last questions that's come up is whether or not you can pay fees at HKIC via cryptocurrency. No, maybe I should say not yet, but no, we'll look into that. So thank you so much, Karen, Vivian, Simon. It's been excellent, and thank you to everyone who's attended. I wish everyone at Paris Arbitration Week a wonderful week. Thanks a lot.
Thank you all.
Thank you.
Thank you.